Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Jim Russo and Greg Kammerer. With Altrius Capital Management, we're going to discuss the benefits of dividend strategies and what's been a highly volatile environment in the markets. It is great to see you both again. Welcome back to Trade Talks. And Jim, let's kick it off with you. What do you think investors are getting wrong about this market?
Yeah, we don't understand why we've had this massive run-up this year in a push into growth and technology companies, especially after the big sell-off last year. And even though we had that big sell-off, those companies are not cheap from our perspective. So we're avoiding most of those positions, and we'd advise most investors to stay away from them because there's just no margin of safety at all in those type of companies right now.
And Greg, your ETF is a dividend strategy. What are the benefits of dividend strategies in a highly inflationary, volatile environment?
So we've seen recently a very interesting, as the interest rates have increased, investors can also just use a high yield savings account now as a different alternative to what they previously haven't been able to use. But we feel that only tells half the story. You know, if you want to beat inflation or have a chance of beating inflation, you still need to have risk assets from a total return perspective that have the ability to, in our case, pay a meaningful dividend currently and then also grow a dividend and hopefully get some value appreciation to offset some of those inflationary issues.
Right, we're not only worrying about inflation, we are also worrying about a recession, right? So what are the benefits of dividend investing potentially heading into a recession?
You get paid to wait, you know, because as top-down investors, we still don't know when the next recession is coming. Could be next week, could be next year, could be 3 years from now. The great thing is there's a margin of safety for the companies we're buying. Selling at about 11 times earnings is really cheap, and we're getting a 4% dividend yield. So you're getting paid to wait, which is almost about what you're getting from a treasury right now. And I know there's risk certainly anytime you invest in equities, but when you buy high quality companies and you're getting paid to wait, it's a good way to be a long-term investor.
And Greg, for those who are unfamiliar with dividend strategies, are there different ones?
Yeah, you have three core strategies. When you think about it, you have high dividend yielding strategies, but they tend to have an index that will maybe reach for yield. There'll be companies that have a yield that's not sustainable, maybe paying out 70, 80, 90% of their earnings. Problem is in that situation, when the earnings erode, which likely happens in a recessionary environment, that dividend can get cut, which is not what we're looking to do. Then you also have dividend growth strategies. That is a strategy where they're targeting companies that have consistently grown the dividend year over year, sometimes for decades. The problem is with those strategies is they typically have a very low yield. So if you're an investor who needs meaningful current income day one, you're only getting the growth of that dividend 10, 15 years down the road to get a meaningful yield. Then our strategy, which also adds value investing into it, focuses on both above average yield plus above average dividend growth. And we feel for the right investors, that's a better strategy to make sure that you're getting good current income, but also sustainable income that's growing year over year.
And that's all great information. So what do you want investors to keep in mind for the remainder of 2023?
I think you have to be patient, and no one knows what the future is going to hold. So collect your dividends, make sure you have a margin of safety, and don't panic when the recession comes. We'll work our way through it, but nobody knows when that's going to happen.
But I think that's what's so valuable because you want to stay invested as a long-term investor. I mean, what if you miss those peaks and valleys that we saw even as recent as 2020, 2021?
Yeah. Or last week, you know,
Right.
Just the time, you cannot time the market. It's just a fool's errand to try. So just when you're an investor, you have to think long-term as if you're buying any business, and that's how we look at it. You know, buy durable companies, selling at reasonable valuations that pay you to wait.
All right, appreciate the insight as always. Jim and Greg, thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.